My name is Hugh Agro. I'm the president and CEO of Revival Gold. Revival is advancing the Beartrack Arnett gold project located in the western U.S. state of Idaho.
Hugh, good to see you again. Thank you for the introduction. I understand you've just been traveling around on a roadshow of sorts. Where have you been and what did you see?
Yeah, just back from the gold forum in Zurich, Merlin, which was exciting. We've got the usual band of pundits. I've never heard them so enthusiastic about the gold price. Ronnie Stiefel, for example, with lots of strong rationale for why gold is looking solid here. And investors, I think, are still yet to jump on the bandwagon in earnest, but that creates great opportunity for investors in companies like Revival Gold.
What was the average age of the attendees in the room? Were there lots of grey-hairs and dinosaurs, or were there some new young blood? Were there kind of the tech migrants coming across, or was that not visible just yet?
Zurich tends to be the older crowd, but to your point, we are seeing some younger people joining in the activities. I think the internet has a lot to do with it. Social media is attracting a lot of younger people into gold and gold equity investing. And there's a lot of communication, dialogue that goes on through social media, and you're hearing that in the discourse at these in-person meetings.
Good. Well, we certainly need it, because it still feels as if the market is pretty unloved, particularly down at the junior end of the sector. Would you agree that the juniors have yet to feel the love?
I would, but as you and I were talking offline, there are indications that that's changing. We definitely have some that are attracting a lot of attention, and so that I believe is a good sign. And if you look in the last 6 months where the performance has been, it's been on those deeply beat up producers, sort of the shorter dated kind of options on the gold price. And the next sort of rotation, I believe, will be into the longer dated options on the gold price, that is the developer explorers. And of course, we've got this, Revival Gold's been talking about this for a long time, but we've got this growing gap between the pace of global production and the pace of global discovery, running at about 10 to 20 million ounces a year versus 120 million ounces a year of production. So that's a big gap since about 2011, and it doesn't sort itself out quickly. It's going to take time and a lot of investment in a very underinvested sector. So that's something that can spring back very quickly, and I believe the opportunity is very good for investors today.
So are you effectively saying that you see the gold supply as being relatively inelastic because it doesn't have the discoveries and the new projects with which it could respond to higher prices?
Exactly. And, to put it into perspective, we would need to discover 10 years worth of gold at the rate we're currently running to replace the Federal Reserve, the U.S. Federal Reserve of gold. And to put that into perspective, as I like to remind people, the U.S. Federal Reserve is only about 1/15 the value of the U.S. Strategic Reserve in petroleum. So it's a very, very precious asset, this gold that we do have, and the discovery, let alone taking these things into production and all that's involved in doing that, is a long dated item. So these are very interesting times here. We've got undervalued juniors, explorer developers. We've got seniors that are starting to get the love at $2,000 gold. A very good shape of those companies are in with dividends and with free cash flow and with pristine balance sheets in a lot of cases. And yet, their future is resting on the junior sector.
I could talk about this all day long, but I think it's important for the developers to come up with an input price on their studies which is below the current market price and which is relatively conservative, because what will happen when a price rises, it becomes easier for an existing producer just to lower its cutoff, and so it can kind of continue. It can kick the can down the road on its depletion because it can add more ounces of the low grade. It can add marginal ounces to extend its mine life. But in a rising gold price environment, if a developer has taken a conservative price on their study, that the full rise of the gold price is enhanced or is captured within the economics of the study at a more conservative price.
Yeah, that's a very good point. And we're seeing the producers today do that with the reserves being booked, at well below spot gold prices. Resources closer to spot gold price. I think the long-term forecast for the metal is still quite low here amongst analysts at about $1,650 to $1,700 gold. But no, your point is a good one. The thing that we have to keep an eye on, though, is that when we make these studies, we tend to make the input costs of production at the current spot rates. So we're talking about energy, labor, other inputs to production, and then we tend to really discount these the gold price at which we do these studies at. So there's an embedded double benefit if the gold price rises, in that the expected cost structure will not go up as much, and that's a benefit as well. But it leads to conservatism in what work is being done, and I think it's fair to say that if a project is nearer term to cash flow, one probably needs to think about a more contemporary gold price. If it's a big project that has a long gestation period until it's actually producing free cash flow, then I think a more conservative gold price is warranted. But for those projects that are in good locations, in the case of a project like Revival Gold's Beartrack Arnett on a brownfield site with existing infrastructure and timelines to production, I think we can afford to be less conservative in our gold price because we're on a shorter path to production.
Well, to that point, you've just put out a news release a week or two ago about an update on the pre-feasibility study, which is due in the middle of this year, and in that, just to encapsulate what that pre-feasibility study will cover. Remind me, is it the heap leach aspect of it on the 380,000 ounces of gold, which is deemed to be treatable in the with recoverable gold in the heap leach?
Yes, it will be heap leach only. Of course, we have a second phase of this project, which is still in exploration, and which would require a mill and longer timelines. A very exciting aspect of this project, but in the first instance, we want to focus in on the heap leach. Why? Because it's relatively simple. It leverages the existing infrastructure. It has a relatively low capital cost of entry, and we can produce gold in this gold price cycle. And just broad terms, our PEA, which was completed in 2020 on this same project, was about 850,000 ounces into the mine plan, produced about 500,000 ounces of gold over a period of 7 years. And I think, broadly speaking, what the PFS is going to do is decrease the risk on that plan, that same plan. Heap leach, relatively modest in scale, 60 to 70,000 ounces a year of gold production, plus or minus 7 to 9 years mine life, and importantly, all M&I, measured and indicated resource for the PFS. Of course, we're going to have inferred material beyond the M&I, but it won't be included in the PFS. The PFS is a more certain set of estimates and engineering analysis. And of course, we'll have fine-tuned the capital, the operating costs, the mine plan, and all of those good things. And we're excited about it because it's the next major value step for us, and it's the next major de-risking.
You've also recently published some drilling results of some oxide intersections, 18 meters at 1 gram, 16 meters at gram and a half. I think those are kind of the figures from the Haiti zone. And you also talk about going on to do more exploration at Haiti. Is that going to be incorporated? Are you going to be able to incorporate the expansion of Haiti into this PFS, or is have you drawn the cutoff already on the drilling of the oxide zones?
We will have all of our 2022 drilling in the updated resource that'll underpin this PFS, but the deposit remains open, and we certainly haven't tested the full potential at Haiti, nor across the left branch of our property position, where we've got 4 or 5 other oxide gold targets, which are highlighted by soil geochem, by geophysics, by rock chip sampling, and have not been drilled by Revival Gold. So these are targets we want to get out and explore. But first things first, we wanted to complete the infill drilling required to convert inferred mineralization to this higher quality measured and indicated category, and to support our PFS. Short answer, yes, the drilling from 2022 will be in the resource, but we're not expecting a huge increase in the resource from that activity. Rather, we'll get to that later this year and next year. We want to complete the PFS first, though, so that we can fine-tune where the high-value targets that will have immediate impact on the mine plan for the next step of a feasibility study, and that's coming here shortly.
So complete the PFS, then do some more exploration drilling on the oxides, and then revisit timings of the feasibility later in the year or possibly early into 2024.
Correct. We will do a feasibility study. There's a lot of people who ask us, why go to the feasibility stage, and I think the industry is littered with examples of folks who run to a construction decision prematurely on the basis of pre-feasibility study engineering. There are still bugs to work out through the stage of PFS to FS. Not so much in the case where you have the existing plant and the site and familiarity, and you're not changing any of the approach, but there are some fine-tuning aspects that we'll want to do, and it doesn't take or detract from our re-permitting cycle, because we'll launch our re-permitting formally following the PFS.
I'm certainly an advocate for never skipping a step, and the delays, the overruns in budget, those typically occur when there hasn't been sufficient de-risking between concept and execution. So you've got my support all the way, if it's worth anything, on completing a feasibility study.
Well, just as an example of that, in between our PEA and our PFS, we did get some changes. We had some pluses and we had some minuses, and those are yet to be sorted out. But it is an evolution. There's a lot of detail in doing this. I mean, we're talking about even a 1 million ounce resource is $2 billion worth of value in the ground, and so there's a lot of expense, capital, and operating related to getting that out of the ground. And those numbers need to be very well understood. They need to be fine-tuned as we go.
And when you mentioned permitting, can you just kind of give me a little bit more clarity on that? Because I know that you've been a past producer. What does the permitting going forward look like in terms of expectations of how long it might take and a sequence, a program?
Yeah, we'll have a lot more detail on that following the release of the PFS, because the PFS will set the footprint of what areas we will disturb. And of course, we're on a disturbed site. We're on an existing plan of operations, an existing permit, but we will have to modify that. And the extent of the modification will come out of the PFS work. Now, having said that, we've already initiated informally our steps for permitting, and that involves doing a supplemental baseline data collection. It involves engaging with the regulators on all the aspects that will have to be re-permitted. And so we started that about 1.5 years ago. The next steps will be further collection of supplemental baseline data to augment what we have in 30 years of operating history at the site. And the other thing we'll be doing, of course, is fine tuning with the regulators all of the different individual permits and making those applications. But generally speaking, we'd like to be in a position to make a decision on construction by the end of 2026. And we'd like to be able to be producing gold by the end of 2027. It will take about a year, plus or minus, to get the site up and running. So those are broadly the objectives we have. But come back to me after our PFS for more details on the specifics and what's involved in the details of getting there.
I will do. It's funny, in some ways, 2020, the end of 2026 feels like a long time away before making a final investment decision, and yet also in the context of how long an average gold mine or an average mine takes to come into production, I think the data is now kind of well in excess of 12 years. So looking at 4 years is on the low side of that. So it's a combination of far dated but also near dated.
Well, it's a process one has to go through. The benefit is, and as we were talking about earlier, we can tighten up our engineering while we're doing that. We can continue to add resources and build out the plant, and all of that's going to be additive to value. So, I think we make good use of the time.
Now, when we were setting up this meeting last week, you mentioned that you'd been to Finland to look at a kind of an analog of the kind of the wider Beartrack Arnett deeper resource, the sulfide resource with some metallurgical challenges. Can you tell me? I'd love to know what you got from your visit and what the Agnico guys shared with you.
Yeah, this is a sulfide deposit we're talking about at Beartrack in the second phase. It will require a mill. It's not that it's challenging. It's that it's just more involved. It's not as simple as a heap leach process, an open heap leach process. It will require more capital and more timelines. And so, we look to examples like Kittilä in Finland as to how that can be done and done successfully. The other commonality between Beartrack Arnett and Kittilä is just simply the geology and the orientation of the deposit. We're both roughly 5 kilometers of strike. We're both a vertically dipping structure that's underground mined at the sort of grades that we're seeing at Beartrack Arnett, and the sort of throughputs that we would imagine for a future operation. And so it was very instructive for our team to get out to Kittilä and have the opportunity to see that operation and how they deal with the deposit and in the mine. Kittilä is Europe's largest primary gold producer. I believe the throughput's going up to 2 million tons a year, and the gold production will be just under 300,000 ounces a year. That's the sort of mine that we envisioned for Beartrack Arnett ultimately. And I think there's a couple of major differences, though, which are favorable for Beartrack. Number one is that our location is certainly much more favorable than being in the middle of the Arctic Circle. From a logistics point of view, from an operating point of view, power costs in the United States, and in particular where we have access to hydropower, are probably about a fifth, 1/5 of what you might see in Northern Europe, and so that's a big advantage for Beartrack Arnett. The other thing is, as we think about the deposit and how we would mine it, one of the aspects about our project, which is so exciting, is that we've got very consistent mineralization, and we've got it in a very what looks to be a very continuous high grade core with this broad lower grade halo around it, and that makes for a simpler mining opportunity because there isn't the requirement to do multiple stopes, extensive development that is required to support having multiple stopes. And so as we look at Beartrack Arnett, we're thinking about long hole open stoping, very commonly used underground mining method for our deeper resources. and very attractive in terms of efficiency of mining. So some very important differences on the mining side and on the processing side. We've now completed 2 phases of metallurgical test work. We are doing some more test work to look at the possibility of shipping concentrate as part of our development plan for the sulfides. In the meantime, what we're seeing is 94% recovery from a very standard flow sheet of a single flotation and then pressure ox leach of residue for gold recovery. In the case of Kittilä, there's another process inserted in there. They've got to do a preparatory flotation to pull carbon from the rock, and that's an added cost and an added complication to the process. But
so their flow sheet is this pre-float of the carbon. Then do they do flotation to get the sulfide, and then they do pressure oxidation of the sulfide?
Correct.
And they produce a con, or do they go through to doré?
They go through to doré.
Okay. And did they share with you kind of key metrics such as operating costs, recoveries, cutoff grade, and average grade?
Yeah, we did get a good sense of where they're at on many of those things. There's lots of public information available for folks that want to find it. But the answer is yes, and it's instructive for us, and it's a hats off to Agnico and the team at Kittilä for being collaborative miners and inviting us out to visit their project and have an opportunity to have these kind of discussions. This is the mining industry at its best, really, and we really appreciate that, having had that opportunity to. Because no mine is exactly the same as another, and so we're not competing with one another. What we're trying to do is improve on each other's activities, and we were joined by some of the exploration team at Agnico, and this is beneficial for them as they think about what's going on in industry. These type of deposits, orogenic gold systems, which I think are becoming more and more of interest in the gold space as we go underground and as we think about finding reserves for the future. I think these bigger companies are going to have to be more creative about where they go and how they go. And so this is part of the learning process on their side.
Yeah, absolutely. Because if you can pay for your capex on a large scale system, if you can pay for the capex at the front end, then everything else within sight of the head frame, so to speak, of your mine becomes potential value. Got a very different economic setup to something without the infrastructure, which is already embedded or paid off.
Yeah. Oh, and you and I have talked about this before, Merlin, but we've got this first phase heap leach. It's relatively modest, but we're also looking at breaking down the second phase of the project, the sulfide phase of the project, as we think about a mill. And if we go underground first and produce a concentrate and ship that concentrate, we can eliminate a lot of the processing infrastructure that would be required on the outset. So in a sense, it gives us a pipeline that's more efficient, and we can still produce a lot of gold through shipping a concentrate. Now, we've got a lot more work to do on that, starting with test work, metallurgical test work, and then understanding the market for concentrates and all of those good things. But as the deposit grows in the underground, and as we have this opportunity with some of the amazing high-grade hits we're getting in this deposit, that will certainly come to the forefront. And then longer term, we've got a very large open pit mill resource, which will be certainly able to justify a mill complex and all of the more complicated, involved steps along the way. It is a big project, and so by breaking it down, we make it a more manageable, bite-sized development plan.
In terms of the budget of what you're going to be spending this year, how much is going into ongoing exploration and de-risking of the phase 2 Beartrack Arnett, and how much is going into the phase 1 heap leach?
Predominantly phase one heap leach.
Do you want to? Can you give?
And you can appreciate that that is how we get more quickly to free cash flow, and it's of immediate value to our owners. We want to preserve that upside. We don't want to dilute our shareholder base. In the absence of a large strategic coming along, we want to preserve that upside for investors down the road.
Slightly coming back to the kind of the opening part of the conversation, which is about where we are in the cycle and how the market is viewing development companies. How do you look at valuation of Revival Gold? Are you working on a kind of towards an NPV number as being the key driver for the valuation milestone of the company based on the heap leach, or are you looking on a per ounce basis for the kind of the wider project, or a combination of the two?
I think this is part of the opportunity for investors right now, because the company is valued right now, I believe, on the leach project, and I don't think we're getting a lot of credit for our longer term potential. And as those ounces in the mill aspect of this project go into an economic plan and come forward as an NPV, as an asset value, I think we'll start to see a dramatic re-rate in the company. And so that's the opportunity. But it's hard to see exactly how different analysts and different investors take a different approach to things. But to answer your question, I think for the most part, at the moment, we're being valued on the plus or minus 1 million ounces of heap leachable material in the project, and we're not getting a lot of credit for the 3 million ounces of mill material. But as that comes into a mine plan and goes into a study, or as investors can start to see the potential around that NAV, I think there's a dramatic re-rate in the company's value.
Well, almost the first step, linked to the pre-feasibility study, we're getting some better detail on the value proposition in the heap leach, because I mean you spoke earlier about the kind of the evolution in thinking, with some pluses and some minuses. You've got the oxides which have been discovered, more oxides, the infill, some good results. Equally, we've had inflation, we've had cost inflation. What's that going to do to operating costs, capital costs? So the PEA from 2020, 2.5 years later, 3 years later, the PFS, I think, is going to give a lot of a much better benchmark for the market to be able to kind of work out what the discount is to NPV and to see whether that's in line with its peers or not.
Exactly. And I think even if we get even a small amount of value accretion for our mill ounces, I think there's a ton of value in the company right now. I mean, if we looked at it on a per ounce basis, we're trading at about $13 an ounce right now, and our peers are double that. And takeout prices for assets like Beartrack Arnett, albeit perhaps a little bit further along the road, are multiples to that. So there's a lot of upside in the story. Our job is to minimize dilution, deliver maximum results, and we're doing that. And the team is delivering on all fronts, in terms of de-risking the asset, in terms of discovery costs at less than $5 an ounce in the ground, and in terms of managing our costs along the way.
And in terms of news flow, what are you looking at over the next few months? Is the next bit of news going to be the pre-feasibility itself, or have you got a few other things in the pipeline on the way?
Main bit of news is the pre-feasibility study. We're also doing an updated resource alongside of that. The big changes there, I think, are going to be around moving inferred material to measured and indicated to support that PFS. But the other thing, which I think is pretty interesting, is as we get more drill data in the underground opportunity at Beartrack, we'll be able to fine-tune the underground plan. And just as a small example of that, our last resource in 2020 was done solely with open pit sized blocks in the resource model. And of course, in the underground, that's not the most efficient way to block out the deposit. It leads to dilution, which is not really what you'd see in an underground operation. So we're fine-tuning that block model sizing for the underground, fine-tuning the mining approach, fine-tuning the geological constraints on the resource model. And I think we're going to see some improvements in the overall quality of the underground resource as we do that. And as we get more drill data into the underground resource, I not only will it grow, but the grade will go up. I'm certain of that. It's one of our biggest constraints on this deposit is drill data. As you know, it's open in all directions. It's 5 kilometers in strike. We've got multiple drill targets, and we're just working with the data we have to show how big and how impressive the potential value of this is.
So by using smaller blocks, I mean, if you use smaller blocks and get a tighter wireframe around your resource, you would normally drop tons and increase grade because you're better constrained on the ore block itself. But what you're saying is that with the new drill data, you're going to get a potential uplift in grade, but also add more blocks along the structure, so you should see the growth in the tons as well.
Yeah, there's a wonderful section, if you can show it in the video here we're talking, which shows the block model in our Joss area. And we drilled at the end of last year 200 meters below that, and we intersected 11 meters of 10 grams, another 10 or 11 meters of 6 grams. And so, that, if you think about that in the context of a large, continuous deposit, it's really important to the resource potential. And we've got a few of those holes that we'll be adding in as part of this resource update in the Joss area and starting to put that picture together. So not only are we going to get improvements as we fine-tune the block modeling, but we've certainly got drill data that's going to improve the underground potential there in the resource as well. Much of it will still be in the inferred category because we just don't have the density of drilling. But this kind of deposit, an orogenic gold system, behaves this way. A lot of continuity, both vertically and horizontally, and a lot of scale.
And where are you on balance sheet? What's the treasury looking like?
Yeah, so we ended last year with just over $3 million, sufficient to take us through the PFS and the resource update that we've been talking about. We are keeping an eye on the market, and we've got lots of dialogue with the various strategics. We'll have to give some thought to the next leg of financing and put that in place at some time along the way here. I think our inclination is to get the PFS results and the resource update results out first. But this market just moves so quickly, and if we see an opportunity or some value add party to bring into the story, we'll move on that.
Good. Well, thank you very much for the update. It only leaves me to ask final questions, which is, did you, when you were in Finland, did you have a naked sauna and drink vodka, and roll in the snow?
we did a PG version of that. We had wonderful hosts. The fellows at Keela are just wonderful, but and the Finns are beautiful people too. So yes, we had an outdoor barbecue lunch by the river, a frozen river in the snow. It was a bright sunny day, and with the geologists. So yeah, very hospitable people. Very good hosts.
Good. Well, good to hear it, and I hope you'll be able to reciprocate to visitors to your mine site in due course.
Yes. We'll work on doing more of that.
Good. Hugh, thanks so much.
Okay. Thank you, Merlin.